it's U2. For all the boomers out there, you'll hear Sunday Bloody Sunday from U2, which I think was the song that really took them over the top. It's Monday Bloody Monday. Okay, I'm going to but let me foreshadow a little bit. Things are fine. Call your mom. Be okay. You're going to be fine. You know, again, the title, I think I put in, the market is crashing, call your mom. It's a little concerning. Not overly concerning. And we'll go over it. We'll go over Deepseek. There's two things this weekend that I think the market is really looking at. There's also a few things. We're going to have catalysts this week, which I absolutely think will change the narrative in the market. We'll look at top 3 stocks for gradual rate cuts from Seeking Alpha. We'll look at earnings. We will look at Deepseek, which is taking over. We'll look at a social request for Archer Aviation. Then we'll go over a lot of stuff. I'm going to be long-winded with just a few notes, but if you want a kind of cliff notes, again, I'm dating myself, but if you want cliff notes, the newsletter, it's free to sign up. Most of the newsletter is absolutely 100% free. There's usually one or two. I didn't do a paid one this weekend. It's in the edit stage. So I just wasn't real happy with it. I kind of saw Deepseek and I said, you know what? I'm going to hold off to see what the market does because I think there's going to be a reaction. So you're going to get some bonus stuff. But again, Linktree, linktr.ee/daily stock pick. The link is down below. It's right below my head. On most platforms other than Apple Podcasts, okay, which is about 20% of my user base, which is fine. But on most platforms, there's video. So just pull up the app, look at the video. Down below my head is Linktree. That is your central space for everything that is this podcast. So to keep up on things, you have the newsletter. To save $20 off your phone bill, you get Visible monthly. I just upped my Visible to the $30 plan. They have a savings. It's unbelievable. Use that link and get $20 off your first month. You can get Tesla, a new Tesla. Just sign up right there. You know, Webull, which is my trading account. I took $1,000. Let's see. I am down on my Webull account because it's mainly iBit and NVIDIA. I am down 5.5% today. But the balance is $11,000. Again, I put $1,000 in there. So am I worried about, you know, the little bit that I've lost today? Let's see. It's $637. Out of it was at $12,000 last week. Am I worried about it? Just okay. I mean, I'm losing a ton. In fact, I have a position in MSTX that was up 20%. I'm now down 11%. And that's just $1,000, but I'm sure my CONL double leveraged in my Fidelity account, that's way down. So let's go over some things first off, okay? The two things that happened this weekend, there were two. Okay, the first one that I will go into depth about is the Chinese AI, Deepseek. Okay, I'm going to go into depth about that one. But the second thing that Deepseek kind of saved is the Trump tariffs. Okay, make no mistake, tariffs are inflationary. And if inflation picks back up, what does the Fed have to do? They have to raise rates. What's the market pricing in? Rate cuts. So what happened this weekend? Trump, there were two planes that had detainees, that illegal immigrants that were sent back to Colombia, and they refused to let them land. Trump immediately put tariffs on Colombia. That moved the Trump tariffs from threats to reality. Okay, and tariffs are inflationary. I think that was the first leg of what happened. The second leg is the freak out over the Chinese AI stuff. So the market's focused on Deepseek. So let's talk about Deepseek a little bit. What is it? It's a new AI platform. You can go and Google it. There is a website where you can use Deepseek. I have used it. It is incredibly, it's impressive. It's impressive. It's Chinese. It's a Chinese AI. Okay. Let's think about this through for 1 second. Does this change the AI narrative? No. But what it does do, since this is open source, it changes the thought process that AI may be commoditized. Okay, Meta has Llama. They're not making money off of this, but if they can attract the eyeballs, they think that they can get more people over to their platform, which increases their ad revenue, which increases the price that they can actually charge for ads, blah, 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 the whole thing. OpenAI is a charged platform. Okay, you can use the free version, but it's not the good one that everybody wants. And what you want to do is you want to set up your AI, your API in your company to use the good one. That's just the question. Is anybody going to connect an API to a Chinese open source model? I don't know. If I ran a company, there's no freaking way I'm doing that. So does it change the narrative? No. But what it does do is the development. Remember, OpenAI was like a 10-year development. They have 4,500 employees, something like that. It's a crazy, crazy cost. They've raised billions of dollars. This was supposedly trained on millions of dollars. And we'll go over the details of it. But was it? Because the question is, and that's the question that the market's trying to determine, is did the Chinese actually steal code? And if they did steal code and they're making it available, there's a back end there to the CCP so they can tell exactly what's going on. So is it going to become outlawed? I would think that this would be some type of thing. Are we going to limit the amount of chips that go over? Who knows? Who knows? But again, you've got those things where was it developed? It can run on a laptop, by the way. That's why you're seeing energy sources like CEG and VST. You're seeing them way down as well, because if it can run on a laptop and you don't need all those data centers, maybe power consumption isn't as immediate attention. So again, there's a lot of ramifications if this is true, but we don't know that it's all true. We know that it's working. We know that it's working on a laptop. We know that it's open source. We know that it's Chinese. We don't know where it came from. Was it really trained on that few of chips? And we'll go over all of this. So what should you be doing right now? Well, first off, you don't rush in, because we don't have answers. So don't think that this is the bottom, because if we look at this QQQ chart, you can see the 4-hour algorithm got you right in there at 519. You'll see this 511. Okay. What's that 511? That 511 is a gap where on January 15th, the market closed at 516. Okay, this doesn't include after hours. This is 4 hour. So the market closed at 516. And then the next candle on January, that was January 14th. 14th, the market closed at 505. Okay, 505. Then on that was January 14th, 9 a.m. There's a gap here, whatever it is. It's a gap between 508. I have my dates wrong at 511. Where are we trading right now? 511. The market pulled back to that gap. We know that the MACD, and again, we're dealing with facts here on technicals. These aren't opinions. The technical on the 4 hour, and we can go and look at it daily. Is there a gap at 511? No. But if we put that line right across at 511, what's 511? Well, let's look at it. 511 right there. Pretty good pullback support there. Pretty good resistance right there until you gapped up. Okay? There are gaps all over the place. On this 4 hour, though, where would I expect it to go? If you break 511 and one of the candles today closes, I would expect it to come down to the 200-day at 500. Okay, it doesn't mean that it's going to do it today. Doesn't mean that it's going to do it. We've got catalysts coming up. We've got earnings and a Fed meeting this week, if you didn't know. So the first thing I would do is not rush in. If you've got positions that you want to buy and they've pulled back, go and buy them. But don't go balls deep. Go very limited. This is your opportunity. This is a pullback, because look at the weekly. Okay, 511 on the weekly isn't anywhere close. It is just at the 9-day. Okay, it's just below the 9-day. You still have the 21-day. You still have the 50-day at 475. We haven't broken this trend line. So if you're calling your mother panicked and you're selling out everything, you're just not looking at the charts. The weekly is still extended. And what does the weekly do? It takes time. Look at this. This is from July down here to October. It takes months to move the weekly down. But I do think we need the weekly to move down. And I think it's clear once you get to 50 on the RSI, and if you get there real quick, I think you can start going balls deep. But that 50 on the RSI, you're sitting there at 62 on the RSI. Is it overbought? No, but it's in no man's land to the higher portion. Okay? Again, the 200-day, the 50-day, everything's positive. Don't freak out. But if you've got gains, lock them in. If you've got, say you bought NVIDIA at $90 and it's over 1 year in your brokerage account or it's in a retirement account and you're freaking out because the NVIDIA just moved from 140 down to 125. Take some gains. Sell 20% of it. Sell 30% of it. And you know what? If it moves down more, buy it. Lock in your gains. Lock them in. I don't think that we're done going down. Do I think it's an overreaction? Absolutely, but lock in your gains. The other thing you should be doing is remember how I always preach about 5 stocks on your watch list that should absolutely, if they pull back 5%, 10%, you immediately buy them. You set the level in your mind. If this pulls back this amount, I'm going to buy it, no questions asked. Just do the research later. Go and look. Because if you don't have that watch list available to you, you're not really trading, you're not investing, you're just using the market to make money. And you might as well be in VOO or QQQ. Okay? You can make money that way. It's fun. But if you don't have that watch list, you're really not doing yourself any favors. If you're worried about the losses, okay, there are 2 things I want you to ask yourself. What was the downside that I said, hey, this is the price where I'm going to get out before you bought the stock? Because if you didn't set that price in your mind or in your notes when you journaled, then again, you're not doing things correctly. There's a system involved. This is more about the psychology of stuff. And so if you're worried, it's because you haven't prepared. And so that downside should absolutely be set every time you put money into the market. And if you've hit it, sell it. If you haven't hit it, nothing has changed. The other thing you want to ask yourself is, what's the absolute thesis? For instance, NVIDIA, what's your thesis? My thesis is these hyperscalers are absolutely chomping at the bit to get at NVIDIA chips. They have pricing power. We will continue to see NVIDIA chips be bought. That's my thesis on NVIDIA. Has that changed? No. The simple fact is it has not changed. The thesis has not changed. So again, I would ask you, what am I worried about? Absolutely nothing. If Deepseek did get trained legitimately on that few chips and they did legitimately spend that small amount of money, I'd be worried. That is a fact. We don't know the fact right now. So my thesis on NVIDIA has not changed. Do I want to add more right now? No. There's a level of uncertainty. I've got enough. I feel like, okay, I'm good with what I have. My average purchase price is significantly down. I think it's around $30 per share. So I've got plenty of room to wiggle around. Am I comfortable that I just bought some at 135? No. But the time frame wasn't this week. It's long term. If I start to see a breakdown of NVIDIA, then I can take it out. But let's look at the weekly chart. Look, you're down at 125. 125 just broke the 21-day. The 50-day is 117. You still have movement down. Okay? And that's on a weekly. And you can see the MACD has reset. The RSI is at 58. We're just getting more downside to the MACD. Okay, if you look at the 4-hour, you can clearly see it has been resistance. We didn't see support at 140. It is resistance. So it continues to be resistance. My thesis hasn't changed. So the Deepseek freakout is a golden buying opportunity for tech stocks, Wedbush. We have seen many of these stocks come off their lows in the pre-market. So you can go and read this article. You can go and see what Dan Ives says about this stuff. Everybody's writing about it. Now, remember, permabulls will be permabulls. Perma bears are waving their flag today, and they're saying, see, we told you a crash was coming. We are in a bull market until you're not. This isn't the start of a bear market. Could it be? Absolutely. Do you want to time it? No. Time in the market beats timing the market. Just make sure if you're freaking out today, your portfolio is not set up for your risk tolerance. That's my point to you. It's not about the market. It's about you. So Deepseek, the freak out, most perma bulls are going to say it's a golden buying opportunity. I would agree with them. I'm a perma bull. Okay? Say you have China's Aurora Mobile soars. It soared 200%. This chart is JG. So if you wanted to use Trendspider, okay, you could use it in the after hours. Let's just look at a chart for today. Okay, we're going to go to a 5-minute chart for today, and we're going to see, here in the after hours, right there. Would I get into this one? No. I mean, this is 5 o'clock this morning. This was trading at $7.79. You had confirmation in a 5-minute candle that this one at 5:30 this morning opened at $9.11. It closed at $13.78. So you could have gotten it at $13.78 and you had confirmation, okay? You would have gotten out at $17.53 or 16, whatever. But the MACD has reset itself. Again, these are 5-minute candles. So if you want to trade something like that, just find a platform that provides you pre-market movers. And you can go and take a look at them and you can trade them. Again, what's your outlook? What's your time frame? If your time frame's short term, maybe you want to trade something like this. But if it's long term, I wouldn't be buying into this just based on a headline. They added Deepseek AI on their platform. Do I want to add that stock? No. Now, as the U.S. tech sector feels Deepseek AI pinch, Societe Generale recommends investing in secular themes. Analyst Moniz said the Magnificent Five and its top 4 customers have contributed about 700 points to the S&P over the last 2 years. In other words, the S&P 500, excluding the Magnificent Five, would be 12% lower today. There may be other opportunities out there. Okay, that's what this research is all about. So what are the catalysts this week? You've got two. You've got earnings and Fed meetings. Okay, the Fed meeting on Wednesday could take this market up. Okay, Jay Powell could say, oh my God, we're in freak out mode. Let's settle the markets and say, we've got one cut coming this year. That would boom the market. Okay, the market right now is focused on very short term, and it's taking this Deepseek stuff and it's pulling everything back. But that could do it. What's another thing that could take the market up? Any of these earnings. You've got Starbucks, Stryker, NXT. You've got Boeing tomorrow, which was pre-announced. GM tomorrow morning, an alpha pick. Okay, Royal Caribbean, an alpha pick. You've got T-Mobile, an alpha pick. And then you've got a Wednesday after the close. Tesla, Microsoft, Meta, ServiceNow, Waste Management, IBM, Lam Research, Celestica, an alpha pick. Wolfspeed. You've got so many tech earnings this week, and there's going to be guidance, and there's going to be talk about Deepseek. So if you want things that will move the market, you've got this. And so again, I'm not worried. I know the stocks that I own. If you don't, then you're just not putting in the work, and you need to put in the work, because if you're not putting in the work, I would say a portfolio of VOO and QQQ, just have at it, buy in and do it. If you don't want to do the work, You can't have days like you're always going to have days like today. Now, I was doom scrolling. I doom scroll. I don't doom scroll on TikTok. I don't doom scroll on Instagram. I listened to a podcast this weekend with Tim Ferriss, and I forget the man's name, but it's his latest podcast. Really, really good. And he said he got rid of Instagram, and he said he's so much happier. He lost 12 pounds, and he said, you know, I don't have the FOMO of stuff. So I doom scroll on Seeking Alpha, and that's what I do. Now, if you want to doom scroll on Seeking Alpha with me, what's the best way to doom scroll? It's the combo, the bundle offer. Get premium and alpha picks for just $6.39, okay? It's a savings of $159. You go over to my link tree and you click this second link. That's the doom scrolling that I do. Now, I would want to point out to you, I was doom scrolling, and this is an article of, let's see, what's the title? These could be the 10 best deep value dividend aristocrats bargains for February. Anybody that's listened to the podcast knows I'm not a big fan of dividends. And so that's my first thing. And I said, you know, let me take a look at this. Maybe I've changed my mind on dividends. Let me start reading. And the author lost me. Okay, this particular line in here. In short term, luck is 13 times more powerful than fundamentals. In long term, fundamentals are 33 times more powerful as luck. That was interesting to me. Not true. In the long term, look at Palantir. Look at Tesla. Look at some of these other names. It means he's never bought those names. So it's not luck. There is a certain thesis to it. It's growth. And so I like growth over dividends. He says he ignores the 12-month price targets entirely because analysts create them to fulfill demands from clients who are too ignorant to know that they are 100% pure guesses. Yes, those analyst recommendations are guesses. Do I think that the clients are ignorant? No. These guys have models. If you've never been to a Wall Street firm, like a trading firm, and seen one of these models, they could change the cost of a bolt in a GM model. And all of a sudden, earnings changes and their price target changes. Okay? Again, you take the earnings per share and multiply whatever random PE you think the stock will trade it in 1 year based on momentum. So that's what he's doing. His top picks... ABM, RLI, CWT. I'll include the picture of them in the newsletter for you. I'm not super impressed. Again, they underperformed. Now, that doesn't mean that every article on Seeking Alpha you can find a problem with. Again, I didn't comment on this guy. I wasn't impressed. But then you get to an article like this, 3 top stocks for gradual rate cuts. And this has fundamental and technical ability to, and the 3 stocks that I like, the one, DAKT, I know nothing about. This is let's say a billboard maker. I think it's a sign maker, designs, manufactures, and sells electronic scoreboards, programmable displays. This is interesting. It's a strong buy in the quant. 1 year, it's up 116%. The valuation on this, they ain't making money. The PE, the forward PE is 18. It's average. But then you factor in the growth, 0.63. Now, it's a small cap, okay? This is a capital market cap of $803 million. Anything under $1 billion, I barely even look at. And the volume, 1,957 shares. You're going to have a hard time actually filling this one. But Steve thinks this is a good one. Again, look at the factor grades. And you have analyzed the virtual analyst report right here. This was just created on 1/7. So you have your own analyst in your back pocket. Valuation offers an attractive valuation, demonstrates exceptional growth, shows profitable metrics. Momentum is impressive with a performance of 107% over 1 year. Revisions are positive, 1 upward, okay, no downward, suggesting optimism. Then you can look at concerns raised and positive raised by Seeking Alpha analysts. That's what you get with Seeking Alpha Premium, okay? And then with the bundle, you add in Alpha Picks, okay? If you're worried about today, Alpha Picks is the portfolio for you. look at the past performance of AlphaPix. It's probably down today. So you most likely will be going into this with a portfolio that's at a good price target. And what did I do? I put a bunch of money in October and I'm up. And it's autopilot. It's 2 stocks per month. One on the first and one on the 15th. That's it. 2 stocks per month. You buy 1% of your portfolio each month, or you can just use it as ideas. Okay, the stocks cover multiple sectors. It is a data-driven portfolio. They have rules around selling and they tell you when to sell. It is a no-brain portfolio. And again, look at the performance and you get it both in the bundle. You get premium and AlphaPix in that bundle and you save $159. So if you're worried about today, that's your best bet. Get a portfolio that's proven with the track record. Okay. And if you want them separately, you can get them separately. Here on Linktree, I've got the bundle as the second link. The third link is Seeking Alpha Premium, where you get a free 7-day trial. So if you like what I just did with the virtual analyst report and the searching out stuff, just get premium. If you don't want the portfolio, just get premium. You get a free 7-day trial. So go and read that article, this article, with your free 7-day trial and go and find it. Now, the biggest movers of the day, obviously, it's NVIDIA. We've got Tevagen, jumped 70% after announcing an expanded collaboration with Microsoft. Logility, it jumped 24%. Then you got NVIDIA, which is losing. You got crypto, which is down. And I would argue, under $100,000, start buying IBIT. Start buying IBIT. Okay? That's what it is. So it's a big week this week. You've got earnings. And we just went over how earnings could shape this market, how earnings could change the narrative. Well, so far, we don't have that many companies. Out of the 36 S&P companies that reported, 80% of the companies are delivering on earnings per share this week. That means earnings could push. What do you have this week? You have, let's see, you have Tesla, you have Microsoft, you have Meta, ServiceNow, Waste Management. You have a lot of earnings this week. You have Blackstone, okay? You have a lot of earnings. Apple on Thursday, Intel, Visa, Atlassian, a lot of earnings this week. And then you have oil companies, Exxon, Chevron. What do they think about Trump telling OPEC to reduce the price of oil? What do they think of Trump actually saying, hey, you can drill more when they're drilling at all-time highs? If you didn't know, they can't produce more because they're firing on all cylinders. And then you've got the price of oil wanting to come down. That may be a little bit of a problem for oil companies. It'll be interesting to hear what they say. So it's a great week. You've got Tesla, Meta, Apple. Here is an article that outlines what you can expect by day. Okay, AT&T already blew it away. Boeing pre-announced. But this article goes over everything that you need to know. Now, let's go over Deepseek again, because I do want to go over some of the details of Deepseek because it is a big deal. I don't want to downplay it. Am I worried about it? No, because we just don't know facts. But let's go over some of the facts right now. It's a Chinese artificial intelligence lab that shook it up. Solely funded by Chinese hedge funds, High Flyer. Revealed its R1 model on Monday and detailed in a paper how LLMs can be built on bootstrapped budget and improved with human supervision. Okay? This will go over everything that you need to know about it. The threats to Google, the threats to NVIDIA, the threats to Meta, the threats to all of the things that you want to know. Oracle, ARM, Microsoft, NVIDIA. That article goes over it all. And here's the thing. Deepseek has now taken over ChatGPT on Apple's downloads ranking. That's a big deal. Okay, that means that people are downloading Deepseek. OpenAI was founded 10 years ago, has 4,500 employees, and has raised $6.6 billion in capital. Deepseek was founded less than 2 years ago, has 200 employees, and has been developed for less than $10 million. You will see copycats of this. It is open source. You will see copycats of this. And can they do it for absolutely less? We don't know. We don't know if this was a screen scrape. We don't know if they just took OpenAI and they got some way into the back door because, maybe they OpenAI installed some server wire that was made in China, a little Ethernet cord, that was plugged in that had some malware directing it back to the Chinese CCP. We don't know. Again, if you're worried about that kind of stuff, you should be heavy into cybersecurity with PanW and CrowdStrike and Fortinet and all of that I have. So again, what's your portfolio doing? Goodbye ChatGPT. It's been 5 days since DeepSeek R1 was dropped, and the world's already mind is blown. 13 examples of that will blow your mind. Go and look at these 13 examples. Again, this is how it's done. If you're not using AI, you're falling behind. But this was impressive. Am I worried? This is it. Here's the numbers from UGAs. Number of H100 chips bought in 2024. Microsoft, 450,000. Meta, 350,000. Amazon, 196,000. Google, 169,000. DeepSeek was reportedly trained on over 200,000 H100s. Okay? They're not trained on Blackwell. Cut these number of chips down by like 20%, and that's Blackwell. Okay? DeepSeek news, true or false, are amazingly bullish for chip makers because if DeepSeek reached this level with just a few thousand chips, can you imagine what can be done with a few million chips? And that's where these guys are going. So again, I don't view it as oh my God, it's an all you can win. I just think bigger becomes big becomes bigger. And so I do think there's an opportunity here for NVIDIA because, again, it wasn't trained on AMD chips. So where are you going to? You going to AMD when you can use fewer H100 chips? No, you're going to NVIDIA and you're using NVIDIA's software as well. So I think it's bullish. Alphabet's NVIDIA-like business may be worth billions. Remember, Apple's AI, which is not so successful right now, but it was trained on Google chips. And Alpha's market value is about $2.5 trillion at a price of $200 a share. They're not factoring in their own chips, which are created from Broadcom, by the way. Now, what's ironic is this came out on Friday or Saturday. I think it was Saturday. Dell may see larger generative AI server pushouts than expected. Loop Capital is reporting this. This isn't good for Dell or SMCI. But what they did note is that Pure Storage has gained legitimate traction with multiple hyperscalers, and it has the potential to sign more than one additional deal. Pure Storage might be a buy. It's a hold in the quant. Why? The valuation. The valuation's just a bit extended. It is. So it needs to come down. It's down 7% right now. So DeepSeek is incredibly cool. And this guy created good for creating trading strategies and trading and PineScript. He has created strategies. If you don't have a strategy, go and try this. And you can import this same stuff into Trendspider. So if you're looking at Trendspider and you're interested in it, go and look at this. Try and create it in your own charting platform. And when you can't, go and get Trendspider. Trendspider is on sale. Use my link again at Linktree. It's the top one. I will send you every tool that I use, my 4-hour algorithm, my 65-minute algorithm, my 5-minute algorithm, all of my watch lists, all of my scanners, everything that I use to manage my own portfolio, all of the watch lists too. All of them. I will send them to you if you use my link to sign up. Okay? And you can save over $1,500. Now, I tell people if it's within your budget, go for the advanced, this top tier. The reason why? Unlimited one-on-one training. You can go over to this model, this YouTube video right here, and you can tell your one-on-one trainer, hey, I've got this model that I want to create in Trendspider. Can you do it? There's your 1-hour training session for the month. Here's the thought process, okay? Say you get 2 training sessions per month, and you bring a strategy and you say, okay, I want to create this in Trendspider. Can you help me do it and set up the alerts? And you bring that twice per month, even more. Say it's 4 times because it's unlimited one-on-one training. Say it's 1 session per week. So 4 per month. What's that? Less than $20 per session. Okay. And that includes the software. So if you get this and it's within your budget, get the advanced tier. Okay. You can get the enhanced tier, includes 1 one-on-one session. Okay. 1 one-on-one session. So that's for the entire year. You get the software for the entire year, but this only includes 1. Get the advanced, move up there. And I'd argue that the AI strategy lab is absolutely worth the $7-8 a month more for enhanced. So, but you can take this video, and I will include this video in the newsletter today so you can watch it. It's 29 minutes. I thought it was incredibly, just insightful. I thought it was good. Now, this particular one, let's talk about this, because this one, it's a clip from this weekend's Compound podcast. I thought it was really good. He talks about how the market expectations in the market are incredibly high. It's focused mostly on politics, but I would argue it's focused on AI as well. The expectations in this market are incredibly high. And so am I surprised that we saw this pullback? No. Do I want to see this pullback? Yes. Look at the weekly. The market just opened up. We haven't even moved on the weekly. You're down at 514. We are off the lows. Okay. Any reaction in the market is an overreaction. So I do like this market the way that it's sitting. I like this weekly. Am I buying balls deep in? No, but I'm adding to the 5 stocks that I said if they pulled back 10% or more, CEG is one of them. Constellation Energy, VST. Do I think that Deepseek is now a replacement for all nuclear power, or that we're going to revamp the electrical system? One of the stocks, by the way, in my in my portfolio that I'm hoping will beat the S&P for this year is GLW, Corning. Just to put it out there, it's Corning, GLW. I put this one in as a bet. What's it doing today? It's down 7% at $50. It's a buying opportunity. You get a gap down here at 47. If I'm holding this for a year, am I worried about 50 to 47? No, because let's take a look at a weekly here. Again, it's a little stretched. Do I want to wait for it? Absolutely, I want to wait for it. But you don't want to wait until it gets to, you're 41 and you never get in. You want to set a price where you should get in. Look at the price. Okay, it's at 46. I'll add 10% of my total position today. And if it pulls back to 47, I'll add more. Identify the stocks you want to own and then just be patient. Okay, be patient. I did the full analysis on the newsletter. So if you're interested in that, go and sign up for the newsletter. You can, this portion is paid. And it's under the paid section. So if you look for this one, let's see, it is back here, the top 10 stocks. But just a live where I record the remainder of the podcast with my chat with James. Yeah. This is, where is it? Seeking Alpha's top 10. I did do a thing. I'll include it. Daily stock pick. 2025 portfolio. Can it beat the S&P? That's it. I recorded it live. I'm going to record a more formal one. But again, that gives you, I think, 10 stocks in a portfolio that I hope will beat the S&P, and GLW is one of them. So let's talk about social requests. Again, if you just comment below, if you, email me, do whatever you need to do to get in contact with me if you want to look at a stock. Jesse emailed me. Hi, my name's Jesse. I'm a big fan of your podcast. I listen every day on my way to work. I'm new to the market, just started investing in November. I was introduced to the market by a friend who was talking about ACHR Aviation, ACHR. Let's talk about this one because ACHR, ACHR Aviation. I didn't know anything about the market research or reading charts, so I trusted his advice and invested at $8.20 and immediately started seeing green. I was hooked and started buying all over the place with no real strategy or understanding, just buying off emotion. I did good on some and bad on others, bringing my P&L really low. So I sold everything right after Christmas for a total P&L loss in the red. I was still up on Archer at the time, but I just thought I would claim the small wins to offset my big losses. Immediately, Archer was shooting up into higher tens, so I did a call option and won that and did a few more and lost, but ended up buying 200 shares of Archer at $8.82. It's been a roller coaster, but I've learned a lot, especially watching your podcast and some YouTube classes. Now I have a plan and a strategy, but was hoping you could take a look at Archer on the podcast and give me your opinion. Okay. Jesse, first off, thank you for being so insightful with your I can tell you're going to be a success. Again, you did it without a strategy. Now you have a strategy. Everybody does that. Everybody. There's not one person that I know who didn't get into the market the wrong way. And in the right way, usually you find a way to get into the market after you've made a mistake. It's the same thing. You know, I'm going to go fix my plumbing. I'm going to have a leak and I'm going to call a plumber. It's the same damn thing. We all think that we're, oh my God. And when you get that first rush of dopamine and you're like, whoa, I can make money like this. Great. Okay. So here's my thoughts on Archer. From a technical standpoint, you're in a bull run. Okay. At 307 in October, this is a bull run. And here in the 4-hour algorithm makes you 352%. Versus buying and holding over the last 24 months makes you 303%. There's 25 positions. So 25 positions over 25 months isn't bad. You win 40% of the time. So it's a little bit less than blackjack. But it's good news because, again, if the company has some positive things going for it, you're probably at better rate than blackjack. But the algorithm got you in here at 307. Got you out with 171% gain just in January. So you did really well getting out around Christmas time, but you said you're still in at $8.82. Do I think that's a good buy? Here's what I see. Okay, from a technical standpoint, we'll go over the fundamentals in a little bit. This is how you look at a stock. So from a technical standpoint, the MACD crossed up, got you in here at 974. The RSI was about 53. Would I have bought this? Absolutely. On a trade, just buy it. I heard a great story about a trader who is a technical trader who bought C Limited, okay, SE, a Chinese software company. For 2 years, he traded this stock. He traded it. He thought it was a shipping company. It's a Chinese software company. He didn't care about the fundamentals. He didn't care what it did. He traded it simply on a chart. So from a 974, absolutely, you're still in a bull run because the MACD is down below the below the oscillator, and it's still moving up. The RSI, a little bit down. Let's see. In today's market, you're down 5%. The Qs are down 2%. So it's underperforming the Qs, but that's expected with any stock that's got big movement. Your 200-day still moving positive. Your 50-day still moving positive. You're down around the 50-day, and the 921 and 50 are right there. What happened the last time the 921 and 50 were all in the same place? You were trading at $3, and it moved back up. Do you have longer-term heights possible in this stock? Let's go and look at a weekly. This was a SPAC, $10. I wouldn't expect it to trade over $10. Okay, why? We'll go to the fundamentals. But a SPAC, I hate SPACs. The special purpose acquisition company, basically it's a stock where the symbol is predetermined and then they just let a company get their listing. There's no research done. They let a company get their listing and the company says, you know what? We'll give you half the value of the stock if you just let our company list and we get a bunch of money from the market. And that's what they do. So I don't like SPACs. But when you look at the all-time high, it's 1729. Do I think it will get up there? No. And why? Because of the fundamentals. And I just know this one. I just know ARCH. It's not covered by the quant. Okay, so we're going to have to look at this one a little bit. Oh, that's Arch Resources, not Arch. ACHR. And thank you, by the way, for including the symbol. It is covered by the quant. So let's take a look at it. The valuation, B. But I want to point out, they're not making money. So it doesn't mean it's cheap. It just means that for right now, for a company not making money, the fundamental valuation looks good with the growth factored. Okay, their growth, working capital, they're making 21% year over year. So they do have some type of income, $150 million. Now the expenses, the net income, they're losing $500 million. So you do want to take a look at how much cash on hand. The one place I know how to find out, and if you're not on Seeking Alpha, you can go and look at this stuff. ACHR right here. You can go and look at this stuff. See, the PE 0 because they're not making money. Cash on hand, $1.20 per share. Okay, $1.20. Shares outstanding, 383. So what does that mean? They have around 380, maybe $400 million. They're losing $500 million. What will they need to do? They will need to issue more stock. And that's what's called dilution. So the average price target is 11.33. You are trading at 9.37 right now. Remember, it's a SPAC. So it IPO'd at 10. Unless there is some type of craziness in this, you won't get above 10. The average price target, again, 11.33. So am I worried about this one? Yes. Go and read the analyst AI. Okay, the competitors are Joby, Lilium, and Whisk. Archer's unique value proposition lies in its strategic partnerships and innovative aircraft design. Remember, this is like one of those, I think it's a drone company where it flies you or something. Price to book is significantly higher than the sector median, indicated in an expensive stock. Suggests that ACR might be overpriced compared to its peers, even though the valuation's B. But they're not making money, so the valuation means nothing because they're not making money. ACR demonstrates robust growth with year-over-year CapEx growth of 73%. Fantastic. Profitability struggles with profitability, indicated by its negative cash from operations at minus 348. That's why it gets an F. But the momentum, which is the number one thing in the market, if you're trading, is an A+. Okay? The revisions, earnings revisions trend is moderately positive with 4 upward in the last 3 months versus 2 downward. However, revenue estimates have seen 2 downward revisions. Again, they're expecting this. You can read the analyst stuff. So from a trade perspective, at $9.62, personally, I would take the profit. But honestly, this is a U trade. You have to assess your own risk tolerance. My risk tolerance, I would have never even gotten in here at $3. And I would have missed out on 100% of that 127% gain. So your risk is not mine, Jesse. That's the first thing I'll tell you. But kudos to you. Everything that you want to learn is on YouTube. I have even gotten some really positive feedback, by the way, on my education section right here. I got 4 emails this weekend alone from paid subscribers who tell me that, hey, Eli had mentioned the paid section, that he had gone back into the paid section to watch the videos and stuff. Yes, it's like a course. So, and you can get a course on how to value stocks and stuff. So the education is paid, and it's just a good resource. But Jesse, kudos to you. So again, that's the podcast for today. As far as scans go, there's a couple in here. There's UNH, which came out of the core portfolio, which had earnings, so it really doesn't have any boost going. But you're seeing it push right up there against that 550 mark, which is a previous resistance, where if you just pull this in, you can see that's previous resistance. Am I buying into this one right now? No. Do I think that, look at how the MACD reset. This is exactly what I'm talking about. When the MACD resets on a weekly and it's moving up, the stock will typically move up. Look at the past few times you hit a bottom. Here, right here on this wick, 475, you were under $500. The last times when you hit that 450, again, you wanted to go in. And then as you gain confirmation over this one, you can get in. But this one at the 200-day, screaming buy. But we don't know what Trump's going to do with healthcare. And that's what this is relying upon. So it's an interesting one. We're in a good market. Again, it's a bull market until it's not. And even at 515, I would say that 511 is absolutely 100%. I'm going to pull this one out, remove this horizontal line because I like this particular one at 511. If we hold that today, you can see it's a green candle. We opened at 510. We're just trading at 515. But any reaction in the market is an overreaction. Just be aware, the weekly candle hasn't even moved the needle from a high MACD or a high RSI. If you hit 50 on the weekly RSI, I think that's when you can go balls deep and take it out. So there's the podcast. If you have any questions, hit me up. Remember, everything is at Linktree, linktr.ee/dailystockpick. I will talk to you tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.